When you're buying real estate, it's the largest financial transaction of most people's lives. Before you put in that offer, what you have to consider prior to offering on a property. In many cases, some of the best properties generally sell in under a week of it being marketed. Based on the speed at which things happen, you're putting the same amount of thought into buying a house or a condo that you would into buying a pair of jeans or an iPhone. We're making a snap decision on one of the largest financial purchases of our lives. Some people, after they purchase property, may feel like they may have gotten played or may have gotten screwed over or may have not gotten all the information that they should have had going in, and they may not feel fully comfortable with their purchase after it's closed. Hey there, people. Welcome to episode number 13 of the Under the Radar Real Estate Podcast with your host, Joshua Jean-Baptiste. On today's show, we are going to talk about how not to get played when buying real estate here in the city of Toronto. Yes, we're talking about due diligence. In segment 2, we're going to get into the market update. We are now into the spring market here in 2024. Numbers are changing. The market feels like it's warming up a little bit. And the Bank of Canada just announced that they're holding rates. So we're going to get into what all of that means for buyers and sellers going forward in 2024. And then lastly, we are going to talk about how I believe that we have a window for condo buyers out there to take advantage of a still slightly depressed market. There's a buying opportunity out there for condos, and we're going to get into just why I think that we have kind of a 3 to 6 week window for condo buyers to take advantage of lower price points. All right, so let's jump right into it. Let's get into our first segment, how not to get played when buying real estate here in the city of Toronto. So I already teased it in the intro saying we are going to be talking about due diligence in real estate, which is a dry topic. When I think about it in my mind, I just think about it as how not to get played. When you're buying real estate, it's the largest financial transaction of most people's lives, right? So you're buying properties worth hundreds of thousands or millions of dollars. So there's a lot of thought, a lot of education, a lot of consideration that goes into this purchase. Now, if you follow this channel, you'll see that last week we posted this video on blind bidding, and we talked about how the bidding process works here in the city of Toronto, especially right now in the spring market. And as things heat up, I thought it was really important for me to kind of go over that process and talk about how some of it might work and how a lot of it doesn't work. But on that, it also had me thinking, I'm sure a lot of you watching this, or those of you who have been through the process of buying a home in the city of Toronto, there's a lot of stress involved with the process, and you may already be watching this video, or from your own past experience saying there's a flaw in the system, especially on the buyer side, right? There's a big flaw in the system where you're having to do so much work prior to securing a property. And it's supposed to be something where you're actually putting in a lot of thought and a lot of consideration into, but it almost feels like, based on the speed at which things happen, you're putting the same amount of thought into buying a house or a condo that you would into buying a pair of jeans or an iPhone. I've actually seen more people probably put more due diligence into buying their new phone than they have their own house. And why is that? Well, when you buy a phone, generally a company like Apple will announce all their new phone and give you all of the new specifications, have this great presentation, tell you about all the new gadgets and all the new accoutrements this phone may have. And it may be a month to 2 months until you're actually able to purchase the phone. So you can do so much due diligence prior to that purchase of this new phone that by the time the phone is available and ready for sale, you know exactly what you're getting yourself into, and you can make a smart buying decision about the phone, what specs you may want, and what color you may want, so on and so forth. And you're generally happy with your purchase because you put a lot of thought into it. In the city of Toronto, as I mentioned, if things are selling in under a week in many cases, especially for hot properties, because of these market pressures and the way things move, sometimes it's almost impossible to get all the due diligence steps done in advance. It is really tough to make sure the physical home is suitable for you. It is sometimes tough to even get some of your financing done in advance. Yes, you can get a pre-approval, but then you also have to consider, will the bank appraise the property? Do you have your deposit money available? Is it an account where you can access the money quickly? All those kinds of things. There's the emotional part, right? Does the property fit within the parameters of your search, right? Is it close to your job? Is it the right square footage that you want? Can you envision yourself living here for 5 to 7+ years? All of these items. So quite often what we see is that certain steps of the due diligence process are skipped entirely because we're making a decision. We're making a snap decision on one of the largest financial purchases of our lives, but due to the market pressures and because things move so quickly here in the city of Toronto, those key steps are skipped, and some people, after they purchase property, may feel like they may have gotten played or may have gotten screwed over or may have not gotten all the information that they should have had going in, and they may not feel fully comfortable with their purchase after it's closed. So in many cases, it really feels like there's a real imbalance between buyers and sellers in this marketplace. So even sometimes when the stats may show that we're trending towards, let's say, a buyer's market, it still feels as a buyer sometimes that most of the sellers are holding all the cards. To back up a little bit, and let's talk about, prior to bidding on a property, what goes into the due diligence? Like, what goes into the thought process about, before you put in that offer, what you have to consider prior to offering on a property. In my mind, how not to get screwed over and how not to get played. We can really break it down into 4 main categories. The first one would be legal. The second one would be the physical. So we're talking about like inspections of the actual property, appraisals, that kind of thing. The third item would be financial. And the final item is lifestyle. So when we break down legal is pretty self-explanatory. We want to make sure that the title's free and clear. There's no liens against the property and the property's in good legal standing. The physical, that's the actual property itself, right? So the due diligence you do in that scenario is either do a home inspection on that property, or sometimes a seller will do something called a pre-inspection on that property, trying to uncover as much of the dirt as possible, as many of the defects, as many of the problems that you could have with the property prior to purchasing it. When it comes to financial, are you able to afford this property? Are you able to look at these price points and all that kind of stuff? Because for most of us, we don't have mountains of cash in our bank accounts. So for most of us, we are borrowing money from the bank to make this purchase. We got to make sure that our finances are in check. So making sure your credit is in check, making sure you have the income requirements to support the mortgage, making sure that if the property needs any work to be done, that you have the financial means to complete any type of major repairs or renovations, or even sometimes minor repairs and renovations that can add up. Make sure you have the financial preparedness to take on this property. And then when it comes to the lifestyle due diligence, making sure that the property suits your current lifestyle, but most importantly, your future lifestyle, right? Is the property we're looking at, how are we going to get to work? Are we going to work from home? If we have kids, what schools are going to go to? What activities we do? If we're someone who enjoys the nightlife, do we want to be close to restaurants, clubs, and bars? If we are active, do we want to be near large sporting facilities? We want to be near hiking trails, bicycling trails. All that kind of stuff is very important. If you are a young couple planning to have kids, will the property support that expanding family? If you are later on in life, older life, you have older kids, or your kids have already moved away, does the property suit your lifestyle as you move into a lifestyle either without kids or into retirement? as an example, you don't want to live in a 4-story townhouse if you have mobility issues or if you foresee yourself having mobility issues later in life. So why do we perform all this due diligence? Well, the main thing is, especially when it comes to Toronto real estate, and we spoke about it in our last video, is that in the city of Toronto, because we are still in a housing crisis, there are so many scenarios where we have to act very quickly if we want to secure a property. In many cases, some of the best properties generally sell in under a week of it being marketed. So as a buyer out there, you have to make very quick decisions about whether A, you want to go after a property, B, if you like it, right? And then C, if the property actually suits you. So while all this process is going on, you still have to consider all of the due diligence items we talked about, because in some cases, you may actually have to consider putting in an offer without conditions that would allow you to do this due diligence post securing a property. So a lot of times you're having to do this due diligence pre-securing a property and putting in an offer without any conditions because you're competing against other offers. So we're going to get into that whole process in a minute, but this is why we try to do as much of the pre-due diligence as possible to put yourself in a position where if you love the property, you can actually try to secure that piece of property. So to sum up again why we perform the due diligence, it's really about risk mitigation more than anything, right? We want to ensure that the property is in good physical standing. We want to make sure that you are able to afford the property. We want to make sure that the bank actually values the property for what you've paid for it. And then you also want that kind of emotional assurance that the property fits your needs. Sometimes you can get caught up in the heat of battle. You see a beautiful property, you want to put in an offer on it. It's outside of your ideal neighborhood, or it may not be the ideal size, but you absolutely love the look of the photos and you love the look of the way it's staged. And you put in an offer and you realize, like, actually this property is nothing of what I had originally wanted. So again, we try to go through those, that due diligence exercise to ensure that the property that you may have your heart set on truly fits within your needs. That way, a year later, you aren't calling me saying like, hey, I need to sell this property after only a year. And I have to give you the bad news that perhaps you may not have built up enough equity for it to make sense for you to sell that property after only a year of holding it. All right. So now that we understand what due diligence is, and these are some of the items, again, that we try to look at as agents to ensure that you're not going to get played when you're buying that property. Now, how can we fix this system, right? This podcast and most of my videos, like I say, I don't want to just sit here and complain about things. I want to try to think of solutions. Are there ways that we can fix this problem? Because ultimately, the larger problem that we have here in the city of Toronto is just a simple imbalance of buyers versus the amount of inventory that we need to satiate the amount of demand that we have. So we have these supply-demand constraints in the city of Toronto that aren't going to get solved overnight, but what can we do to solve some of the other problems we have in the market, right? And the one right now, from my perspective, from my point of view, is this due diligence problem. Especially for those those buyers out there who want to make sure they're making an educated purchase and they want to feel comfortable with their purchase. So if we look over to our neighbors over in British Columbia, back in 2023, the government in BC actually instituted a 3-day cool-off period to residential real estate sales in that province. BC has a lot of the similar dynamics that Ontario has when it comes to real estate, and they probably face some of the same problems when it came to due diligence, right? People not being able to make the proper educated buying decisions just due to the market forces, right? So what the BC government instituted was a 3-day cool-off period. So once you purchase a property, the buyer then, within 3 days, has the option to rescind that contract for purchase. Now, they can't just walk away scot-free. So buyers are entitled to a full refund of their deposit after they've purchased the property. However, the buyers who do back out of that contract, they do have to pay a rescission fee of 0.25%. So there still is a small fee attached to a buyer who just backs out of that contract. However, 0.25% can be small peanuts when it comes to large purchases, and it at least gives buyers that peace of mind that if things within that 3 days don't seem right, they can back out for a small penalty, and sellers are slightly reimbursed for the inconvenience of having to relist their property and selling it to someone else. Now, that's not the only way. So we clearly see what BC has done when it comes to addressing that due diligence problem, but there's other ways that we could perhaps address this. Perhaps here in Ontario, instead of having a rescission period, we could actually have mandatory conditions that have to be included in every agreement of purchase and sale, right? Perhaps it could be something as simple as lawyer review must be in the contract and it can't be waived by either the buyer or seller. Something along the lines of that, or mandatory financing or inspection clauses, so on and so forth. Some type of mandatory condition where there is a certain step that must be undertaken to ensure that whoever buys the property has a chance to do some type of due diligence to ensure that the purchase works for them. Now, some of you watching this video who own property could be thinking like, well, all of these rules that you seem to be talking about seem to only benefit buyers. As a seller, I don't necessarily feel comfortable with all these rules. Well, perhaps from the selling perspective, if everything goes well and everything goes right, sure, yeah, it could feel like, hey, I'm harping on sellers. However, anyone who has sold property, even once the property has gone firm, as we like to call it, which means there's no conditions remaining on the property, or perhaps you sold it without conditions and the deposits in hand, that is a firm offer or a firm agreement of purchase and sale, which means the buyer cannot back out without any type of legal ramifications. However, if that period from when you've sold your property to closing, many sellers can still be fairly stressed out with that process, because while the buyer is saying, hey, I've gone firm, I don't have any questions I don't have any concerns when it comes to the financing of the property or the current physical state of the property, you're really hoping as a seller that the buyer will close, right? So if they've gone into a bidding war and they waived all their conditions, you are taking their offer at face value, assuming that that buyer has the financial worthiness to be able to close that purchase. So as a seller, a lot of times when you've sold your property, it usually means in many cases that you are planning to buy a property or have already bought a property, and you're going to take some of the proceeds of the sale of your current property and apply it to your next one. So then what happens then if your buyer doesn't complete their offer to purchase? It creates now a domino effect in the market. And while for years in real estate, we would see very few scenarios where this would happen, over the last couple of years, we've actually been seeing this more and more. A lot of the lawyers I speak to talked about many scenarios over the last few years where one purchase agreement goes south and it creates this domino effect where multiple sellers and then buyers have to renege or renegotiate their purchase agreements to be able to get out of a problem, because somewhere along the line there was a buyer who couldn't close, which then created a cascade of other purchasers and sellers who couldn't close on properties. So if we had some type of mandatory either condition included in an agreement, or if we had a rescission period, it gives both buyers and sellers an added level of comfort to say that, hey, once a property is sold, there's a very good chance that the purchaser of your property will likely come good on their agreement and close on the property, because there was that added level of forced due diligence that was included in the agreement of purchase and sale. So as you can see, there's a lot that goes into doing due diligence on a property before you decide to put in an agreement, before you decide to put in an offer to purchase. A lot of the clients that I work with, we try and complete as much of this pre-due diligence in advance. The main things are, number one is getting a pre-approval done to make sure that you have the financial and the credit worthiness to be able to complete a purchase or sale. But then quite often when I have clients looking for houses or condos, I'll try to obtain as much as I can when it comes to whether the physical structure when it comes to a house, so getting a pre-inspection report in advance, or if you're looking for a condo, we'll get a status certificate to be able to review it in advance, or have a lawyer review it in advance of an offer, or at least be able to take a look at it, even if you're going to still include a condition, to at least just get an idea of what the property is like. I'll usually tell many of my buyers before they also decide to purchase on a property, hey, why don't you take a walk around the neighborhood, get to know the neighbors, get to know the parks, get to know where the transit stops are, all that kind of stuff. So you can even do some of that emotional due diligence to understand, is the property right for you prior to you putting in an offer to purchase. And then ultimately trying to make sure that a lot of my buyers and a lot of my clients aren't getting played when they decide to purchase real estate. All right. So now that we've decided to do as much due diligence as we can prior to buying real estate, one of the key pieces of due diligence is actually getting to understand where the market's at, which now leads us into our market update for February of 2024. It is now March. We're looking at the stats of this past month to kind of see where we're at and to kind of see where we're likely headed for the rest of the spring market now in 2024. So as we now pull up the Toronto Regional Real Estate Board's Market Watch for February 2024, quickly go over some of the key overall average statistics for the entire GTA. So when we look at sales were up a whopping 18% over last year. And remember, these are year-over-year statistics. So last year at this time, that's when the market was probably at its tightest it's been in a long time. There wasn't a lot of inventory and there were a lot of buyers, but because of the lack of inventory, there wasn't a lot of sales. And we saw that reflected last year at this point last year when it came to pricing, because pricing was also quite elevated this time last year. So when we look to new listings though, new listings, like I just mentioned, are up 33.5%. So there's a heck of a lot more listing inventory this time than there was last year. Active listings also up 15%. So active listings are listings that have currently been on the market that haven't sold yet. Then that leads us to average price. So pricing is up 1.1% when we look at last year. And yes, I know I just mentioned that last year we were in a tighter market. So it'll be interesting to see how next month works, because last year we saw kind of pricing start to edge upwards at this point because inventory was so tight and rates were low. We'll see if pricing starts to push upwards right now. What I'm seeing in the market is that pricing is still relatively flat. While we're still seeing a lot of bidding wars and such in the market, most properties aren't necessarily selling far above what market value is. So while you may see a property that was listed, let's say for example, $699,000 for a detached house in Toronto, that house that's listed for $699,000 likely isn't selling for that price point, but it's then likely selling kind of in and around where that market value is. So we aren't necessarily seeing pricing fly upwards, and it's reflected right now in the average price only being up 0.1%. And then we look specifically at the 416, so here in the city of Toronto, sales were up double digits in pretty much almost every category except for condos. Condos sales only being up 7%, as opposed to townhouses up 18, semi-detached 27 almost, and detached house prices up sales up 19%. However, when it comes to pricing, especially the 416, kind of reflects what I was just saying just a few seconds ago. Actually, pricing in detached houses, for example, down 3.5% over last year. Townhouses down almost 3.5% over last year. Condos flat. Semi-detached house prices up slightly at 3%. But as you can see, again, most pricing has still remained relatively flat. A lot of that is probably just down to interest rates. The Bank of Canada just today being March 6th, just announced that they're holding rates again. So at some point, the Bank of Canada will likely cut. Right now, they're still holding rates, and that's clearly reflected in house prices because house prices are still staying relatively flat. People aren't necessarily willing to push the average price well above where it is right now, just due to lending rates. Now, as you know, many of you who have followed this channel, you know that we like to look at a lot of the advanced stats. This is under the radar real estate. We like to look at a lot of the stats and a lot of the stuff that's not really reported on. So we went over all the average stuff, the thing that every other news outlet and realtor out there is likely talking about. We're going to get into some of the nitty gritty and the advanced metrics. So when we look at two of our favorite advanced metrics, the SNLR trend, which is the sales to new listings ratio, and then the MOI, which is the months of inventory. SNLR for the city of Toronto is sitting at about 45%. So that means 45% of all new listings that are hitting the market are selling. Again, I'll repeat it over and over again for those who haven't watched before. Generally, a balanced market is about 50%, so we're still just slightly below balanced market, still somewhat in buyer's market territory, but we're certainly trending upwards towards a balanced market. And a lot of that is actually due to the condo market. When we look at specifically freehold, sales to new listings ratio is much more in the seller's favor. When we look at months of inventory, so in the city of Toronto, we are sitting at 2.7 months of inventory. Balanced market is at 2.5. So again, we're still slightly in buyer's market territory, trending towards balance, but a lot of that is being pulled down by condo inventory, which in the third segment, we've alluded to the fact that there's a buying opportunity right now in the condo market, which we're going to get to in 1 minute. But when we look at the overall average, yes, we are still kind of slightly in buyer's market territory, being pulled down by condos. When we look at houses, that number is a little bit tighter, and we are certainly more in seller's market territory. Now, when we actually look at break down some of the under the radar neighborhoods, those neighborhoods are pretty much in line with the overall average Toronto numbers. W3, we're sitting at 45% for sales to new listings ratio, months of inventory at 2.3. W04, we're at, again, 45% sales to new listings ratio, 2.8 for months of inventory. CO3, now this is interesting because sales to new listings ratio is only at 40%. So that's very much buyer's territory. But that was likely pulled down by some of the condo inventory that's in CO3 right now, and not so much the houses, because if you were to go look for houses right now in CO3, you aren't seeing much. I have clients looking in that area. There isn't much when it comes to houses, so that's certainly condos that's pulling that number down. And months of inventory sitting at 3.1. Again, a lot of that is the condo inventory that's kind of sitting. Now let's get into the home price index. So we talked about the average price when it comes to City of Toronto. Well, the numbers that I like to look at, the HPI index, again, it's one of the more advanced statistics. It's a more smoothed out version of the average price that gets rid of some of the highs and lows. It's more median pricing than it is average pricing. So I find it's a little bit more accurate and gives you a better read on where price points are in the market at this point in time. So when we look at the City of Toronto, the composite benchmark price is just under 1.1 million at $1,071,200, and that is down 0.84% over last year. So let's just call it flat. When we look at detached houses specifically in the City of Toronto, they're sitting at just over 1.6 million. Semi-detached houses just over 1.25 million, so we're at 1.27. Again, numbers pretty flat over last year. Townhouses, 854,100. Again, the year-over-year price is pretty much flat. And condos sitting at $710,000 almost, and they're down about 1.5% over last year. So again, fairly flat. So as I said at the start of this market update, numbers are flat pretty much across the board, no matter what metric you look at. But then this is very interesting. So I talk constantly about certain under the radar neighborhoods in the city of Toronto. And as I'm pulling up the numbers to look at these under the radar neighborhoods, you're going to notice something that stood out to me right away. So when we look at the average price for all of the neighborhoods here in the city of Toronto, you're going to notice that a lot of the under the radar neighborhoods that we've been talking about for now almost a year, when we look at the year over year price change, I don't know if people have been watching maybe perhaps my videos and understanding that these neighborhoods are under the radar and perhaps hidden gems, but you're actually going to notice. So when we look at like W03, the average composite price is up almost 3%. When we look at a lot of the neighborhoods surrounding it are either just negative price growth or pretty flat. When we look at W04, sure, that one's flat. But when we look at CO3, for example, CO3 is leading all neighborhoods in the city of Toronto, up almost 8% year over year on the composite index. So it's clear that people are now starting to see value in these neighborhoods. So while I still truly believe they're under the radar, I also keep saying this, they're likely not going to be under the radar for long because, again, they are trending upwards when a lot of other neighborhoods are kind of struggling when it comes to year-over-year price appreciation. So a lot of this is driven by the Eglinton Crosstown LRT that cuts right through all of these neighborhoods. People are seeing and understanding the value of when that subway line opens, this neighborhood is going to be so much more connected to the city of Toronto. And also, I think people realize that these are just really midtown neighborhoods. And it's really easy as a commuter to get from these neighborhoods into the downtown core rather than buying a house out of the suburbs where you're commuting for an hour plus. A lot of times it's 80, 90 minutes to commute into the city for most of the suburbs kind of surrounding Toronto. In these neighborhoods, you're living in the 416 with a M postal code and you're commuting downtown. And I mean, right now it's probably about a 30-35 minute commute. Once that subway opens, you're starting to get into downtown in under 20 minutes, and people are starting to see that value. So if you're interested in any of these neighborhoods, we are here. I work here, I live here, I know these neighborhoods like the back of my hand. So if you're interested in buying in any of the under the radar neighborhoods, so to kind of give you an idea where these are, so W03 and W04, those are the neighborhoods stretching, let's say, from like Davenport up to, let's say, just north of Lawrence, between Weston and Dufferin. And then when we look at CO3 is kind of that entry-level luxury area. So we're talking neighborhoods like Cedarvale, Oakwood Village. And so it basically stretched from, let's say, Dufferin over to about Yonge Street, just north of Eglinton to St. Clair. So that neighborhood there, again, your average price is 1.6 million, but your neighboring neighborhoods are Forest Hill, Lawrence Park, Wychwood, where the average price is much, much higher. So you're getting a lot of value for your money in that area. So if you're looking to buy or sell or even rent in those neighborhoods, certainly hit us up. Our Calendly links below. Book a call. We'll be more than happy to chat real estate with you. All right. Now this leads me into what I'm really excited to talk about on the podcast is the current condo buying opportunity that exists here in the city of Toronto. And I put a lot of emphasis into every single word there because I don't know if people truly understand the buying opportunity that exists right now in the condo market in the city of Toronto. So let's quickly just look at some of the numbers to give you some perspective into what I see and what some other realtors see right now in the market in the city of Toronto. So when we look at housing types and if we just look at inventory, so if you were to look at a snapshot by the end of February, because these stats are from February, where we're at in terms of inventory in the market. So if we look at all the different freehold homes, So that means detached houses, semi-detached houses, and townhouses. So non-condominium product. We finished February with just over 1,000 active listings. So to put that in perspective, if we were to compare that to the condo inventory, by the end of February, we had, and this is both condominium apartments, which includes lofts, and condo townhouses, there were just almost 4,000 available units for purchase when it comes to condominium type product in the city of Toronto. So that's a massive gap. There's 3,000 more properties available on the condo side when we compare condos to houses. Now, some of you watching this may say, okay, no, like you're comparing a tiny little condo to a big house. And yes, I am comparing those two, but I would encourage many of you to watch some of our other videos when it comes to condo life and actually thinking about the space you use on a day-to-day basis. But let's push that aside for one now and let's just look at the numbers. And for those of you looking to purchase a condo right now, you've already decided that, hey, you want to live in a condo or an apartment or a condo townhouse. There is a massive opportunity right now in the market to purchase that product, because while on the house side, we are trending towards a seller's market, in the condo market, we are firmly in a buyer's market. So that means in most cases, when you're looking to purchase a condo, there is negotiating room. So another metric you can look at is the average selling price as a percentage. So most condos are selling under 100% of the ask price, meaning there is likely in most cases some negotiating room when a condo is advertised for sale, right? So when you look at that selling price, you can likely negotiate it down a little bit. On the house side, there is no negotiation whatsoever because houses are firmly over 100% of the asking price. So most houses, when you see this asking price, it is in most cases selling for above their asking price. So very easy to see just from those numbers that we are in a scenario where there is likely an opportunity for you to buy a condo, be able to negotiate on price, negotiate your terms, include conditions in your offer, and do your proper due diligence to purchase that type of property because there's also less competition for it. And even when we look at pricing, so we look at pricing in some of these areas, especially when I look at like in the West End, W01, so that's like Bloor West Village, we're getting some of High Park. Pricing is down about 7% in that area when we look at year over year. When we look at W02 and W03, pricing down 4 and 3% respectively. So these are some of the under the radar neighborhoods, right? So we're talking Fairbank, we're talking Weston, we're talking St. Clair and Old Weston. So that's Carlton Village area. Some of these neighborhoods with a lot of brand new condo product, actually, especially when we look at Carlton Village area. We have like Scout condos over there, Reunion condos, brand new buildings, prices trending down. There's certainly deals to be had in some of these neighborhoods. And then when we look at some of the more kind of traditional condo areas, when people think condos in the city of Toronto, we look at CO1 and C10. These are some of the neighborhoods right downtown in the core, and CO8. In every single one of those neighborhoods, we're looking at year over year pricing that is down over last year, right? So CO1 is down almost 3%, CO is down 7%, C10 is down almost 4%. So right now, again, especially when we look at numbers compared to last year numbers were already trending down in condos. So we're getting kind of a further discount over the already discounted prices of last year. Now, because the house market has already started to kind of turn the corner and numbers are starting to trend slightly upwards there. And that combined with today, the Bank of Canada announcing that they're holding rates again. And most of the prevailing thoughts within the financial sector is that the Bank of Canada at some point will likely start to cut rates. I mean, the Premier of Ontario has already asked the Bank of Canada to look at a rate cut in the near future. So there's some political pressure from different voices within Canada for the Bank of Canada to start pushing rates back down and start to make things a little bit more affordable. It's a double-edged sword, especially here in the city of Toronto, because once those rates start to get cut, start to get pushed down, I'm sure a lot of you know what that likely means. What will happen to house pricing will likely start to push up. So house prices have already started to push up, and condos generally lag houses by a few months when it comes to price growth, right? So usually condos are the first one to fall, but then condos are usually the last ones to start seeing price increases. So what I'm seeing right now on the ground is that condo prices haven't really started to push upwards, and inventory is still a little stagnant, but I don't anticipate that to last for much longer. So as the house market continues to tighten, we'll then start seeing some of those smaller home purchasers, or people who may not have the budget for some of these home purchases. As home prices continue to trend upwards, they're going to start to flock back into the condo market. And then as rates come down, we're going to see a lot of new buyers, people who were renting, who will now start coming back into the condo market. And then inevitably, that'll likely start to put pressure again on pricing, inventory in the condo market, which will likely start to see condo prices start to trend upwards, like to start to see competition come back to the market. We'll likely also start to see less incentives from developers. And this is something I haven't really touched on, especially when we look at the neighborhood you talked about, Carlton Village. There's a couple of new developments there that had completed over the course of the last year to 18 months, and these developers still have inventory. And these developers are offering wild incentives for people to purchase some of this stagnant inventory. So whether it be stagnant inventory or even buildings that are about to start construction or at different phases of construction, developers are also offering tons of incentives right now to purchase condos. We are in a scenario that I haven't seen in years. I think the last time we saw condos in this state were probably, this was probably like 2013, 2012, when I saw this many like incentives on the new condo side and a lot of condo product just kind of stagnating, right? When we listed a condo, we very well knew it could take 30, 40, 60 days for a condo to sell. We are back in that mode right now. It's unlikely to stay here for much longer. So buyers out there, if you're looking to purchase a condo, number one, watch some of our other condo videos. We break down whether if you're a family looking to buy in a condo, we have the top 6 things to avoid when purchasing a condo. What else? We have done videos on maintenance fee myths. Watch some of those videos, get educated, and then give us a call. We'll be more than happy to help you find a condo, whether it be in one of the under the radar neighborhoods or some of the more kind of traditional condo neighborhoods downtown. We know these areas, we know these buildings, we know them very, very well. We have clients who buy and sell in these buildings all the time. Hit us up. Our Calendly link is down below. We'd be more than happy to chat about where you're at right now, what you want to buy, where we see growth, and we can certainly help. We can create a search and tailor the search for what you need. Anyhow, so that's it for episode 13 of the Under the Radar Real Estate Podcast. We broke down how not to get played when purchasing property here in the city of Toronto. There's a lot of things to consider when doing due diligence. And then we also kind of got into things that the government could potentially institute or implement to protect buyers and even sellers a little bit when it comes to properties closing and people doing due diligence. So it'd be interesting, those of you who watch, your take on that. Should the government look at a BC-style rescission period? Or should the government force people to include certain conditions in their offer to ensure that buyers are doing a minimal amount of due diligence prior to putting an offer on a home or prior to firming up on a property? Should they be doing a minimal amount of due diligence to ensure that both buyers and sellers are better protected in a real estate transaction? We also went over some of the market stats, where the market's at right now, where it might be headed. We'd be interested to hear your thoughts on where you think the market's headed. If you think we're wrong, if you think that we didn't dissect the stats properly, also put that down. We love any type of comments that can make any of our videos a lot better. And then finally, we broke down why we think right now there's a huge opportunity in the condo market for condo purchasers out there. Again, if you want to buy a condo, if you're interested in buying a condo, if you absolutely hate condos and you don't think they should exist, please put it in the comments down below. We love to see all the comments, both positive and negative. They're all good. I'll throw some banter in there. I'll give you some sarcastic replies if I think your comments are a little off base, but don't take it personal. It's all love. That's it for today's show. So remember, in real estate as in life, the next big thing might just be where you least expect it. So remember, stay educated, stay positive, and until next time, peace out.